Warren Buffett, the greatest investor who ever lived, averages 20% annually. The Medallion Fund averaged 66% every year for 30 years. That gap is not skill. That is a different category of thing entirely. Imagine a machine that prints money with a mathematical certainty that defies every known law of the financial markets. On Wall Street, if you beat the market by 5%, you are a genius. If you beat it by 10%, you are a legend. But if you generate 66% returns for 3 decades, you aren't an investor anymore. You are a statistical anomaly that shouldn't exist. You are a ghost in the machine. This is the story of the most successful and the most secretive hedge fund in the history of capitalism. It is a story that doesn't begin in a boardroom or on a trading floor, but in the quiet, dusty halls of a mathematics department. To understand how they did it, we have to look past the money and the mansions, and into the mind of a man who saw the world not as a collection of companies, but as a series of solved and unsolved patterns. In the world of finance, the concept of the efficient market hypothesis suggests that all available information is already reflected in a stock's price. It says that you cannot consistently beat the market because someone else has already found the edge before you. For decades, this was the gospel of economics. Yet, tucked away in a nondescript office building in East Setauket, Long Island, a group of scientists was quietly proving the entire world wrong. They were extracting billions of dollars from the global markets with a clinical, cold precision that left the rest of the industry in a state of shock and disbelief. Most hedge funds struggle to keep their heads above water during a recession. Most legendary investors have years where they lose money. But the Medallion Fund seemed immune to the laws of gravity. They made money during the dot-com crash. They made money during the 2008 financial crisis. They even made money during the global lockdowns. They didn't just beat the market, they seemed to be playing a different game entirely. The architect of this impossible machine was a man named Jim Simons. He was not a trader. He was not an economist. He was a world-class mathematician and a legendary codebreaker. Before he ever looked at a stock chart, Simons was solving complex geometric problems and working for the National Security Agency during the Vietnam War. He spent his days breaking Soviet codes, looking for tiny, hidden signals in a sea of random noise. He learned that even the most chaotic systems have a structure if you have the patience to find it. When he eventually turned his attention to the stock market, he didn't see businesses or CEOs or products. He saw the ultimate code. He realized that the movement of prices was just another stream of data, and like any data stream, it was filled with patterns that the human eye was too slow and too emotional to see. In 1982, Simons founded Renaissance Technologies. But he didn't hire the typical Wall Street types. He didn't want the MBAs from Harvard or the fast-talking brokers from Manhattan. Instead, he filled his office with physicists, astronomers, and computer scientists. He wanted people who were used to looking at the stars or subatomic particles to find the truth. He wanted people who understood that the world is governed by math, not by stories. In the early days, they struggled. They tried to trade like humans, using their brains to predict where the price of gold or the yen would go. They almost went broke. It was then that Simons made a radical decision. He decided to take the humans out of the loop entirely. He realized that the greatest enemy of a successful trade is the person making it. Humans are biased. They get greedy when they should be afraid, and they get afraid when they should be greedy. Simons decided that from that day forward, every decision would be made by a machine. The strategy behind the Medallion Fund is one of the most closely guarded secrets in human history. To this day, even after decades of success, the exact details of their algorithms are known to only a tiny handful of people. But in simple terms, they pioneered what we now call quantitative trading. While the rest of the world was looking for a narrative to explain why a stock was moving, the team at Renaissance was looking for statistical anomalies. They discovered that the market is filled with tiny, fleeting patterns that repeat over and over again. These aren't the kind of patterns you see on a daily chart. They are micro-movements that might only last for a few seconds or a few minutes. They found that certain commodities always behaved a certain way on a Tuesday afternoon, or that the price of a stock would twitch in a predictable direction when a specific set of currencies moved in unison. They weren't looking for a home run. They were looking for thousands of tiny singles. They built a system that would place thousands of trades a day, betting on edges that were only slightly better than a coin flip. If you have a 51% chance of being right, and you do it 1,000,000 times a day, you will eventually own the world. This is the power of high-frequency trading and the law of large numbers. But to make this work, they needed data. And they didn't just need the price data everyone else had. Renaissance was among the first to realize that everything is data. They collected weather reports, shipping manifests, and obscure economic indicators from every corner of the globe. They spent years cleaning this data, making sure it was perfect, so their algorithms could find the ghosts in the machine that no one else could see. The reason it worked where everyone else failed was a combination of speed, automation, and a total lack of ego. When an algorithm at Renaissance finds a pattern that is no longer working, it doesn't try to justify itself. It doesn't hope for a turnaround. It simply stops. The models are constantly being improved and updated by a team of scientists who are treated more like researchers in a high-end laboratory than employees at a firm. They removed human emotion from the equation and replaced it with an unwavering trust in the math. They realized that the market is a physical system, governed by the laws of probability. While the rest of the world was trying to predict the future, the Medallion Fund was simply calculating it. This level of success created a unique problem. The Medallion Fund became so large and so profitable that it began to threaten its own existence. In 1993, the fund was closed to outside investors. Today, you cannot buy into the Medallion Fund. It doesn't matter if you are a billionaire or a sovereign wealth fund, the door is locked. The only people allowed to invest in the fund are the employees of Renaissance Technologies themselves. This has turned the firm into a sort of private club for the world's most successful scientists. By keeping the fund closed and limiting its size, they ensured that their trades would never be so large that they would move the market against themselves. They found the perfect balance between scale and efficiency, creating a closed-loop system of wealth generation that is unparalleled in human history. The results are almost offensive to the rest of the world. Since its inception, the Medallion Fund has reportedly generated over $100 billion in profits. Even after charging their employees massive fees of 5% for management and 40% of the profits, the net returns are still higher than anything else on the planet. Jim Simons became one of the wealthiest men on earth, not by selling a product or building a company, but by simply being right about the math. The performance of this fund is so consistent that it has become a benchmark for what is possible when you combine extreme intelligence with extreme computing power. It is a reminder that the markets are not just a place for exchange, they are a mathematical puzzle that can be solved. The most powerful move in the game of wealth is no longer about finding a great company. It is about building a system that can find the truth faster than anyone else. Jim Simons and his team of codebreakers did exactly that. They solved the market, and in doing so, they changed the world of finance forever. They proved that while money might be the prize, the real power is held by those who understand the code. In a world driven by money, the most powerful investors in the world don't rely on instinct. They rely on data. And in the silence of their server rooms in Long Island, the machine continues to hum, 24 hours a day, extracting the future from the noise of the past.